You are watching Market Watch, the brief overview of the key events from the world of finance. Today we will offer you to look at the market from an unpopular point of view. We will immediately inform you that we are not talking about a conspiracy, but most likely about the desire to wishful thinking. Look at the headlines of the largest media outlets. They all talk about slowing inflation in the United States. Now let's look at the facts. The Consumer Price Index rose by 0.3% in April, which was lower than the previous and projected values. Everyone, from respected media to the managers of the largest investment funds, seized on this information. But why is the April figure not compared with the growth rates in January and December, and even more so with the data for November, when the inflation rate in the month-to-month ratio was only 0.1%, and in annual terms the index increased by a modest 3.1%. Let's focus a little more on the annual report on changes in the Consumer Price Index. According to the results of April, it grew by 3.4%, which is lower than the forecast value of 0.1%. At the same time, the annual figure was the highest for the period from October 2023 to February 2024. But investors ignored this, contributing to a significant recovery in key stock indexes. Of course, this is good, because a bull market is always better for long-run investors. Nevertheless, it is important to take into account that the current situation contains many risks. Indeed, for further growth, investors need to receive additional confirmation of the Fed's willingness to lower the rate this year. As you can imagine, this is unlikely. Now let's talk about oil. Yesterday, the U.S. Energy Information Agency published a report on changes in crude oil reserves, according to which stocks are declining in the second week in a row, exceeding the projected pace. It is also important to take into account the general euphoria from the so-called decrease in inflation. Nevertheless, there was no significant increase in oil prices. This should alert customers. After all, the appearance of even a not very strong bearish fundamental factor can provoke a significant wave of sales. Shifting to the cryptocurrency market, we will see a similar market reaction: rapid growth. It is difficult to find other reasons besides the publication of data on changes in the Producer Price Index in the United States. On the one hand, this is good news, because investors are quickly returning to the market, still showing high interest. But on the other hand, the cooling of interest in the stock market may provoke another wave of sales. In this case, Bitcoin may return below 60,000, which is extremely negative for the cryptocurrency market. After all, this scenario takes into account the development of a deeper wave of sales. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.